Hi, Charles Cherney here with The Real Deal, episode 13. And today's question is, what due diligence ought one to do when making an offer on a condominium? It's an important question, and I would say that it's essential to include in your offer a condominium document and budget review contingency. This will afford you, as a buyer and your real estate attorney, the opportunity to review the condominium documents and budget that govern the association. So, with that protection in place, what is it that you're actually going to do in your due diligence when considering a condominium? I think first you're going to consider the number of units that are owner occupied. If the association has a low owner occupancy rate, you need to think carefully about your decision to pursue purchasing the property if you intend to owner occupy. Are you going to be comfortable living in an association where there's many people who are renting and therefore possibly many people who are coming and going? Is your lender going to be okay with there being a low owner occupancy rate? In a perfect world, the owner occupancy rate will be above 50%. And, if it's 100%, that's fabulous. It's just important that you understand what the number of units are that are owner occupied and have decided you're comfortable with the percentage. Next, you're going to want to take a look at the financials that govern the association. Obviously, the essential document is the budget. And when you're looking at the budget, you're going to want to look to see that there is a monthly condo fee for each unit, perhaps, and what's in reserve, which is the dollar amount set aside for any unexpected expenses that may come up. In the Cambridge and Somerville market where I work, it's not uncommon for associations to be self-managed, to be small, and to carry a nominal reserve. That's perfectly fine. It's just that you don't want to be surprised by these realities. You just need, therefore, to review the documentation, the budget that's in place that governs the association, and make sure it's something that you're comfortable with. Either the association will be self-managed, which is typical when there's 2, 3, or 4 units, or there'll be professional management, which is more common in larger associations. So gather what you can in regards to financial documents. You're going to want to confirm that for condo fee collection, there's a separate bank account that exists for the association. Look, every now and then you'll meet with a very relaxed association where things are not formally set up. And if you're going to enter into such an association like that, you need to make sure you're comfortable with that arrangement. So, for example, in a 2-unit association, perhaps one of the owners is responsible for paying the bills and they collect from the other unit owner, and it's handled very informally. Look, that's perfectly fine if you're okay with it. But again, the norm would be for there to be a separate bank account for the association to which unit owners make condo fee payments, and then the money is there for bills to be paid like master insurance. So, do your due diligence on the budget, discover what amount, if any, is in reserve, discover how the association is run, and make sure you're comfortable with the arrangement. Additionally, you're going to want to look into whether or not there are any pending special assessments which would require unit owners to pay an additional amount beyond the condo fee to attend to a particular project. So, for example, if an association plans to repaint the building, that requires a special assessment and the cost is $15,000, you're going to want to determine how much the unit you're purchasing will owe, and if, as the new owner, you're going to be on the hook for the assessment, or if the seller will pay the portion owed by the unit you're interested in. It's quite common for pending assessments to be paid for by the seller prior to the closing date. But again, you need to look into the matter, and you may wish to look to see what recent assessments there have been and ask if there are any under consideration. So it's about doing due diligence on past assessments, present assessments, and future assessments. Do your best to take a temperature of any special assessments that would require the association to make each unit owner pay an additional fee beyond the condo fee. Now, every now and then, an association will have a very healthy reserve and so much money in it that if they're planning a special project like a new roof, they might be able to pay for it out of the money in reserve. But again, this is more the exception rather than the rule. Typically, larger special projects require special assessments, and you'll want to know what your unit will owe, the one you're considering purchasing, based on its percentage of common elements. So if it's a 3-unit association, it might be that these are 33 and a third percent for each unit for any special assessments, 1/3 essentially. But, the math and the percentage of common elements can differ depending on the size of the association, the number of units. So, you'll want to do your due diligence there. In terms of whether it's professionally managed or self-managed, clearly some people will prefer a professionally managed association. But if it is self-managed, you'll want to understand who's in charge, because if it's the seller who's in charge of the self-managed association, you'll then want to understand who's going to take over the self-managed association when the seller leaves, and discover, what the association's plans are with the change in ownership and the primary person selling. So you don't want to end up in a situation where it's suddenly on your lap and you didn't expect that, and everyone expects you to take over because the seller was the person doing the books prior to the sale. So, with self-managed associations, just try to discover what's going to happen moving forward. It may be there's already someone who owns another unit who will continue in the role. For professionally managed associations, you can learn a little bit about the management company by doing a little research online. And, maybe you can just do your best to understand how communication for the association flows. Associations will also have trustees. And in larger associations, it's not uncommon for a buyer or the buyer's real estate attorney more regularly to reach out to a current trustee just to take a temperature on the association and to ask some basic questions about the overall health of the association. So, in a smaller self-managed equation, it's not as common that you can easily reach a trustee, but it's still worth the effort if you can. And it's not uncommon for your buyer's real estate attorney to make the reach out to just confirm, that the association has a bank account, and to ask a couple basic questions that, are part and parcel of reviewing the association. Another question to have asked is there any pending litigation against the association? You would want to know if there's a lawsuit that's outstanding, because you may not wish to enter into an equation where there's pending litigation. You might also want to inquire if anyone is behind on their monthly condo fee payment, because if someone's in arrears and it's significant, it may impact your comfort with moving forward with your decision to purchase. You would want to ask if there are any meeting minutes. And it's typical that people look over the meeting minutes for the current calendar year and maybe go back a year or two in time just to learn about what the association's been talking about. And by reviewing these meeting minutes, discover if there's anything substantive that you would want to ask more about that you didn't know about until reviewing the meeting minutes. We talked about assessments and the importance of understanding any that are pending, reviewing any that have happened in the recent past, and any that are, scheduled for the future. And in addition, it's probably a good idea to just find out if the association is considering any major projects, so that you're not surprised as a new owner that they're going to replace the plumbing stacks or rebuild the front steps or re-landscape the property. It's typically the case that those kinds of projects are discussed in advance. And so if there's anything on the association's radar, you probably can discover this by looking into meeting minutes and asking a few basic questions. It's probably a good idea to find out as well if the association has a handbook or a rules and regulation document. So sometimes these can exist within the recorded condo docs, but often they exist as separate documents, PDFs, outside the condo docs that are the rules that pertain to the association. Topics that can be covered in a rules and reg handbook include the pet policy, what the smoking policy is. And in today's era, it's not uncommon for newer associations in Cambridge and Somerville, where I work, to be non-smoking. What's the rental policy? Is there a minimum lease term? It's not uncommon for it to be 6 months. Sometimes it's even 12 months. Now and again, it'll be 3 months. But, the ban on Airbnb is more common these days. So you'll want to understand what the rental policy is if an owner wishes to rent their unit, and maybe just make sure that the rental policy is being enforced. So if the minimum lease term is 6 months, and in the 6 unit association, you learn that someone is doing Airbnb, you have to ask yourself if you want to purchase a unit if someone's not in compliance with the rental policy. And that could be an ongoing issue for you if you purchase. If you have a dog, make sure the pet policy is going to allow your dog to live there. So look, the rules and regs, whether they're embedded in the condo docs or stand outside of them through a separate document, you do want your association to share with you, or the association you're considering joining, to share with you what rules are enforced. So how do they handle snow removal? Is it done professionally? What questions can you think of in closing that are on your mind that may not be covered by the rules and regs, or might not be specifically addressed as a line item in the budget, but you'd like to learn more? It really does pay to take the time up front when you make an offer to do this due diligence. And this is why you have a condo doc budget and document review contingency, so that you're afforded a measure of time between accepted offer and signing the purchase and sale to do your due diligence, to be comfortable with the association that you're going to join by proceeding forward in the transaction to purchase the unit. My name is Charles Cherney. I'm a top residential real estate agent here to help you buy the right home and sell for the best price, and help you navigate the waters of purchasing a condominium in Cambridge and Somerville. Reach out by text, telephone, or email if I can be of service to you in your search. Be in touch.